Okay, let's dive right into this explainer. We're looking at why Northern California land is transforming from just a, cool lifestyle choice into a seriously flexible, under-the-radar asset class. If you're an investor hunting for something more tangible than a volatile stock ticker, you are in the exact right place. Today, we're tearing down the fundamentals of rural land investment, focusing on a region that's quietly pulling in some really smart capital.
Just take a quick look at your current portfolio and ask yourself, where exactly is the next big real estate opportunity? Like, where can you actually find high-potential property that isn't completely saturated, drowning in red tape, or just massively overpriced? Look, most folks are out there fighting tooth and nail over tiny margins in overcrowded suburban markets. But as we know, true long-term growth, it's usually hiding exactly where the mainstream crowd hasn't even thought to look yet.
Now, when you hear California real estate, I'm betting you instantly picture something crowded, wildly expensive, and, let's face it, pretty volatile, right? But the reality in the northern rural counties is a totally different financial ecosystem. We're talking about incredibly spacious, highly affordable acreage that offers stable, long-term utility. It's literally a completely different game up there.
So, here's how we're going to unpack this whole asset teardown. We've got 5 parts. First, the rural investment opportunity. Second, how natural resources drive value. Third, recreation and asset appreciation. Fourth, the affordability factor. And finally, number 5, long-term growth potential. Let's get into it.
All right, Section 1, the rural investment opportunity. Let's see how this creates a foundation for off-grid living, not just as some weekend hobby, but as a serious investment strategy.
To really grasp the financial upside here, we kind of have to redefine our terms. Forget those old cliché hippie tropes. Today, off-grid living is all about resource independence, slashing your holding costs and locking in long-term self-sufficiency. From a purely financial standpoint, not relying on public utilities means you aren't bleeding capital every single month on mandatory bills just to hold the property. Your overhead basically drops to the floor. It's an incredibly strategic way to hold a hard, tangible asset while staying completely in the driver's seat of your development costs.
Moving on to Section 2, natural resources drive value. The key takeaway here is how raw natural terrain translates directly into hard property value and future development flexibility.
Look at how these diverse landscapes actually give you varied utility for totally different buyer markets. You've got Modoc County, right? Super remote desert land, incredibly low population density, absolutely perfect if you're looking to build a large-scale private solar compound. Then jump over to Shasta County, where lake access is a massive driver for recreational value. The beauty of Northern California is that you aren't boxed into a single asset type. You can target the exact landscape that fits your specific exit strategy.
And when we talk about development, you really have to consider climate overhead. The region's long growing seasons and that fantastic open acreage sun exposure, those are hard assets. They make sustainable development incredibly viable. I mean, when a property boasts strong solar potential and a mild climate, your long-term utility costs absolutely plummet. You aren't just buying dirt here, you're essentially buying reliable access to free energy. And let me tell you, that drastically spikes the future resale value for whoever ends up building there next.
But hey, energy is only half the equation, right? Securing water is a literal game changer for land value. And this region gives you so many diverse access options. We're talking private well installations, rainwater collection systems, seasonal storage, plus natural springs and creek access. Financially speaking, if you have a parcel with established or even just highly probable water access, you are commanding a massive premium. It upgrades the land from a simple camping spot into a highly productive agricultural or homesteading asset.
Okay, Section 3, recreation and asset appreciation. Let's look at how low population density combined with year-round outdoor access creates this amazing sustained market demand.
Whenever you plan to eventually exit an investment, you obviously want a huge pool of eager buyers. And just look at these recreational drivers: fishing, hunting, hiking, ATV riding, camping, horseback riding. Every single one of these represents a completely distinct demographic. That proves this land has massive, diverse resale appeal. You're not just hoping a developer comes along, you're selling to off-roaders, hunters, and nature photographers. By holding an asset that appeals to so many passionate, lifestyle-driven buyers, you're seriously de-risking your investment.
Because future buyers aren't just looking for an empty dirt lot, they're buying into a lifestyle. And that means your proximity to public lands directly boosts your own asset's appreciation. Think about it. If your parcel happens to border a national forest or is just a quick 10-minute drive to a prime fishing lake,
That public infrastructure basically acts as an extension of your property. You get to leverage literally millions of acres of state-maintained beauty to drive up the asking price of your specific parcel. It's fantastic.
Which brings us to Section 4, the affordability factor. Let's break down the core financial argument of getting way more land for way less capital.
Now sure, remote properties generally don't come with utility hookups or perfectly paved roads. But for a smart investor, those conditions are exactly what create such an affordable entry point. It's a feature, not a bug. Developed properties strap you with high initial costs, tiny little lots, and restrictive zoning rules that totally block your innovation. Remote land, on the other hand, gives you a massive footprint for a fraction of the cost. You're trading a little immediate convenience for ultimate control and serious long-term upside.
Because when you dramatically lower your initial buy-in, guess what? You free up the actual capital you need to develop the asset and force its appreciation over time. If you aren't completely draining your bank account just to close the deal, you suddenly have the liquidity to drop in a solar array, dig a well, or throw up some fencing. You control the improvements. You get to add that sweat equity and strategic infrastructure that practically multiplies the value of the dirt underneath it.
And finally, Section 5, long-term growth potential. Let's wrap up by seeing how this flexible development locks in an upward trajectory.
The absolute beauty of this asset class is that it doesn't force you into a massive all-at-once capital expenditure. You can take a gradual, step-by-step approach, which takes so much financial pressure off. You can literally start small, park an RV on it for weekend camping in year 1. Then, maybe add off-grid water and solar in year 2. Eventually, you develop it into a permanent homestead or a high-end recreational retreat. You force the appreciation completely at your own pace on your own budget.
And you definitely aren't out there doing this in a vacuum. Northern California has this incredibly strong historic homesteading and agricultural culture. That means the local supply networks are already well established. You've got farm stores, feed suppliers, and skilled local contractors ready to go. Having that kind of existing community and infrastructure drastically lowers the barrier to entry for new landowners, completely mitigating the risk of developing raw land.
As the source material so powerfully puts it, own your land, own your future. And that really hits the nail on the head. Acquiring this flexible, resource-rich land is fundamentally about taking back control of your financial destiny. It acts as an incredible hedge against urban inflation, a safe haven from volatile markets, and it's a foundational asset that holds intrinsic value simply by existing. It's real wealth. You can walk on it, improve it, and eventually pass it down or sell it for a major premium.
So as we wrap up this explainer, I want you to really think about this. Will your next investment be just another invisible line on a digital ledger, something you have absolutely zero control over? Or will it be an asset that can physically sustain you? Think about how a Northern California land asset can offer you both robust financial growth and tangible, real-world independence. It's definitely something to consider next time you evaluate your portfolio.